Hello everybody, welcome back. This is Steve Adams with Fidelity Funding. Today I'd like to talk a little bit about what I consider to be the best home loan available, the Veterans Administration Home Loan. Now what makes the VA home loan stand out from all the other loans is that there is no money down required. But before I get into the nuts and bolts of the actual VA loan program, I'd like to take a minute to talk to the veterans. Thank you for your service, veterans. What you've done through your service, through your sacrifice, is to make our country safe and to make it possible for people like me and you to apply for home loans and to buy real estate. So now let's talk a little bit about what makes the VA loan program so great. All right, now as I already stated, the number one thing is that there's no money down. So compared to an FHA or a conventional loan, that's a substantial benefit. On a conventional loan, the minimum down payment is 5% typically, and on a FHA loan, the minimum down payment is typically 3.5% down. Now what this represents on, say, a $200,000 sales price, 3.5% down would be $7,000. Not a small amount of money. Now, the good news is for veterans, they have the freedom to put down more money if they want to. They could put down $7,000, they could put down $20,000, $1,000, or they could put absolutely no money down. The second strong benefit of this program is that it is more forgiving of credit problems. So, let's say a veteran has had some credit issues in the past. The credit underwriting guidelines are less stringent than they are on an FHA or on a conventional loan. Now that's not to say that everybody's going to qualify, but your chances of getting a VA loan are greater with credit issues in the past than they are if you were to apply for an FHA or a conventional loan. The third thing that makes this loan so really great is the amount of money that can be borrowed is greater than it is with other types of loans. The underwriting guidelines are different for a VA loan. Typically on a conventional loan or an FHA loan, the underwriter is going to look at the income of the borrower in relation to the house payment and the income of the borrower in relation to the house payment plus all of the other debts. In car loan, truck loan, charge card minimum payments, alimony, child support, all expenses. Now, on a VA loan, there's a third underwriting criteria. That is the residual income. So what that means is, after all of these expenses are paid, including the normal living expenses, groceries and child care, those types of things are all calculated in, and it's looked at the residual income. Is there enough money to pay all of the living expenses for the veteran, plus the principal, interest, taxes, and insurance for this new home, and any related fees like a homeowner association fee? That is also considered in the borrowing underwriting criteria. So what this means is the monthly mortgage payment in many cases is higher. The minimum that's allowed is higher. The maximum that's allowed is higher, and that equates to the veteran being able to borrow a larger loan amount. So, with that said, now let's talk about what makes for an eligible loan. All right, first of all, this is a loan for veterans. So this has to be a United States veteran who has served in the United States Armed Forces for one of the following scenarios. First scenario, they served 181 days of consecutive active duty in peacetime. Next option would be that the veteran has served 90 days of consecutive duty during a wartime. Third option for veteran eligibility is that the veteran has served 6 years in the reserves or the National Guard. And the fourth and final way that someone can be eligible for a VA loan is that they are the spouse of a veteran who has died during active military duty or from a service-related disability. So the next thing that the veteran has to do to be eligible for a VA loan they have to be able to demonstrate stable income history. And what this means is that over the last 2 years, there's been a steady income that can be documented of income, and that there has to be that residual income that we spoke about a moment ago. Third item that's required is related to the property itself. The property has to be eligible. So, what we mean by that is that the property has to appraise for the sales price or greater, and the property must be considered safe, sound, and sanitary. So the Veterans Administration is going to protect the veteran to make sure they're not paying more for a house than it's worth, and that the house is safe, that it is structurally sound, and that there are no known issues associated with living in the home. So that is a veteran's home loan in a nutshell. If any of you have any questions, please feel free to contact me. Thanks for watching. Y'all have a great day.